you so much, Denise, and welcome everyone to this afternoon's session, focusing on bottom line and top line strategies for inclusive insurance. So this is a very exciting session because it tried to address some of the questions that I always get from insurers. How can you make it work? How can you make money and also serve clients? So this is a very exciting session, and I'm glad that we have Pioneer, who have had quite an interesting journey that we all have been learning over the years. And I'm privileged to moderate this session with Bert from Microinsurance Master. And just to introduce our guests, so we have Lorenzo Chang, who is actually the CEO and president of Pioneer Life, and is also the head of the group on the retail side. Lorenzo is also the current chair of the Microinsurance Network, and over the years, Lorenzo has gladly shared their journey as Pioneer in terms of microinsurance. So looking forward definitely to his presentation today as well. Then Geric is actually the first microinsurance champion within the Pioneer Group. And him and Lorenzo really worked to create the story that we are going to hear today. And then, of course, Bert, founder of Microinsurance Master, a very interesting program, which I'm also proud to be part of. It's an accelerator program that is creating leaders in microinsurance across the globe. And there are many people who have gone through the program already and making a difference in their respective countries and organizations. So it's a very exciting afternoon. We step aside and look at the practicalities of inclusive insurance, really trying to say, how can you make inclusive insurance work for your organization and also for the clients? So you'll hear both sides of the coin, talking about social dividends, but also financial dividends as well. So I hand over to Bert, who's going to moderate the session. In terms of questions, please feel free to post your questions. We'll have sections where we will actually look at the questions and get Lorenzo and Geric to answer those questions. So I hand over now to Bert to facilitate the session. Bert.
Thank you so much, Lemmy, for your introduction. Indeed, with you, I'm really excited that we have this session because we get this question so often, how do you really scale microinsurance? And we can talk about it for a long time, but Pioneer in the Philippines has been a remarkable champion who was able to grow their microinsurance business to over 20 million enrollments and quite some lessons along the way. So this is the first time that we can share that in public with Microinsurance Master. We've been to Pioneer already a couple of times, 2 times. Their story was shared time and again. But this is the first time that we have this in this format. And so that we can not only share it with the participants here, and also with whoever will join the recording or watch the recording later on. 2 hours is a long time, and it will be short on the same time. You will see as we go through the story. We really want this to work for you. So please feel free to continue to ask any questions that you have in the chat. Lemmy will be watching those, and whenever we finished up a kind of an episode or a chapter that we want to discuss, we'll dive into the questions so that you don't have to wait and sit until the very end to get your answers to the questions you might have. So please do keep us getting in your questions so that we also keep a pulse and can respond to that. How is the session going to work? First, we're going to start with putting the foundations. We're going to learn a bit more about the story from Pioneer, how they really got started and how they grew. And then in the second half, we're going to dive deep in some of the remarkable elements of their success story, how they really managed to do that. But first, I would like to invite Lorenzo to join me here on the video feed and to tell us a little bit about really how at Pioneer the idea of microinsurance, how it really came about. you were one of the first to really develop and emphasize on developing microinsurance when it was still a novelty. So what drove you at the time, and how did you get about it?
Okay, Bert, thank you very much. I like that
Lorenzo,
question.
you might still be on mute. Is that possible?
No, can you hear me? Can anyone hear me? I'm actually talking.
Lorenzo,
Yes.
we hear you.
Yeah, I can hear you.
All right. So, well, I think to the question from Bert, so Lorenzo, what actually drove you to try out microinsurance? Well, you know, I want to be cheeky and say insanity. And in truth, one has to be, sometimes I thought one has to be a bit daring and maybe slightly a bit crazy to actually attempt to do that. But in truth, if I could show you a picture, Bert, are you able to show a visual? Yeah. Okay. All right. We are. Okay, maybe not these pictures. Yes. Right. This was the inspiration, gentlemen and ladies. This was the inspiration. In many parts of the Philippines, as I'm sure there might be in Africa, we have what you call these sari-sari stores or mom and pop stores, and they're really literally, littered in the countryside and sometimes in the depths of corners of the cities. And so what they do is they sell goods. It's like an extension of your pantry. But more importantly, if you see the stuff hanging, these are sachets. And sachets are, small packets. They're small packets containing anything you can think of. Oil, cooking oil, coffee, creamer, sugar, detergent, soap, even chewing gum. And so for me, that stirred, an inspiration. Why not insurance in bite-sized, affordable chunks? And so, and of course, a big question is how large is the market? Bert, maybe the next slide, the next visual, please.
Is this one you want, Lorenzo?
Okay. Yeah, that's fine. Okay, so this is the market, gentlemen. Yes, well, how will you stand out? So this is a real issue, isn't it? This is the market, folks. This is the market that we are out there, underserved, and a large part of it unserved. Okay, and so let's get to the bottom of it and ask ourselves, how many are they? Bert, that's the other side, please. Thanks. Okay, now I want you to concentrate on how large are they? Look at traditional insurance. All of us are running after in the Philippines. It's only 2%. The AB market represents 2% of the Philippine market. We're about 109 million people. And so what do you want to do? And people ask us, all insurance companies are running after the 2%. It becomes a very bloody market. So how do you grow? And you go down the pyramid, you go down the ladder where there are millions and millions of people waiting to be served. And so I point out to you 13%, 26%, and 37%. Altogether, this is the C market and the D market. They comprise 76% of the Philippine population, or about 82.8 million Filipinos. This is the mass market, all right? Now, sometimes you can see traditional insurers try to attack the 13%. So even if you don't include that, the micro market alone is the 26% and the 37%. So that is 63%, or about 69 million Filipinos. That is how large the market is.
That's huge indeed, Lorenzo, and I think it's a picture that we can paint in many other countries indeed. So that's fascinating. So you have that insight. This is the market that we can serve, and then how did you get the company? How did you get the board convinced that this is something you had to go after?
Clearly, I tied it up with the vision. Our company's vision was to become an insurer of choice. And how do you become an insurer of choice if you are not serving, if you do not serve beyond the 2% of the population? And so for me, it was a no-brainer. And that's what I went to the board with. I said, if we want to be an insurer of choice, we have to serve more Filipinos. It's not just a 2 million, because even if we get all of it, that won't be enough. So I said, there's 68 million in the micro market. And if you add the mass market, it's a total of 82 million. And so that was one of the early reasons for us to get into it. They said, okay, you can try. I mean, that's how we convince them. There are all these large numbers. Now, I have to say, though, that there were the early efforts. There are two very memorable ones. One is really a failure, and then the other one was a challenge to get it started. Number one, our first project was a comic book for children, because we thought, yeah, comic book, it teaches children money smarts, adults like it. And together with that, when you buy the comic book, you activate the code and you get free insurance and savings. Brilliant, we thought, brilliant. No, not brilliant, failure. It succeeded as a comic book. Sales for comic books went well, but no, very few people were activating. At its height, only 15% of the buyers were activating the cover. So it did not succeed as a tool for insurance. And we know now why. We did not do proper research. We did not capture the voice of the customer. We did a little bit of checking, and then the rest of it was really in our company, in our lab. We thought we knew what the client wanted. We said, hey, this is a product, we think it's affordable. We think that there's no lapsation, et cetera, et cetera. So we think it's terrific. Very often we all do that, but no, that was the biggest mistake. We did not check with the customer. Okay. The other approach we did was we said, okay, so that failed. Let's try something else. At that time, the Philippines, was a big name in microfinance. It was and so there were lots and lots of microfinance institutions, but none more popular than one of the largest, if not the largest in the country, called Card. And so everybody was trying to court them to say, can we partner with you? At that time that we went after them, they had 5 million members. Today, they have 8 million members, so they've grown tremendously. Anyhow, so we said, and so I remember the chairman told me, well, Lorenzo, if you really want to get involved with us, there are a few things we need. I said, sure, tell us. So he says, number one, we want bundled products. We don't want just one product. We want a slew of products all together, because these are what we think are needed by our market. We want death cover, we want accident cover, and we want, more importantly, calamity cover. Property damage arising from flood, typhoon, earthquake, and fire.
Because that's a big thing in the Philippines, isn't it? Calamities. You have about 20, 25 typhoons coming across the country every year.
Yes. And you should see about that later, because even last year, in the year of the pandemic, the storms did not stop, the typhoons did not stop, the volcanic eruption did not stop. But anyway,
so that's not a small ask to include calamity insurance.
That's right. So we said, yeah. I said, yeah, sure, we'll do that. And he said, oh, no, stop saying that. He said, I also want it highly affordable. I said, so what are we talking about? And then he said, oh, $5 annually.
Wow.
All of that for $5 annually. So, okay, so that got me, a bit surprised. I stopped a bit, and then I said, yeah, of course, we can make it work. We can make it work. He said, oh, no, that's not the end of it. I want claims settled within 5 days. That's a biggie, guys. Traditional insurance, you have property damage, you send in a surveyor, you have an adjuster, et cetera. But in this particular instance, people, we couldn't afford, the premium was so low, it couldn't even afford paying for anyone, And so we said, yeah. I said, okay, we're gonna try and make this work. And so we actually did. We've actually made it work. and that portfolio has grown tremendously. And that Microfinance Institute is today our partner in the Philippines' first microinsurance company ever.
Yeah, you have a joint venture with CARD when it comes to microinsurance.
That's right. That's right. So I'm yeah. So.
All right, cool. We're going to delve into that story later on as well, about how you managed to do that and how you also managed to do these claims in 5 minutes. So 5 minutes, that's really short, but like 5 days,
5 days,
that would do.
5 days.
That's the next frontier, indeed. You would think that I'm sleepy, but it's you who is in the middle of your night, not me. So blame on me here. All right. So this is really how you got started. And I mean, everyone can tell from just seeing you're passionate about this, right? Is that something that you really need also to make it happen?
Yes, because it's not, I mean, guys, it's not easy. It's not easy, but it is not impossible. So there's got to be passion to want to do something. And it's not CSR. It's not CSR. It is a business model. And so, yep. So there's going to be a clear-cut drive. Why am I doing it? Who is my client? What do I want to do for them? And what do they need? And how can I get to them? And clearly, we kept trying. We had a few misses here and there, but we also had a few hits. And that helped tremendously. And you talk about our enrollment, yeah. So remind me about that, because we can update you as to what happened to those 20 million enrollments in the midst of a lockdown last year.
I'm looking forward to that, and it actually brings us to the next point, because obviously you're the CEO of Pioneer Live and responsible for the retail activities. So it's not you yourself who was going to kind of execute that. So you needed someone within the organization who could really bring that dream that you had into reality, which brings us to Geric Laude, who is here with us on the phone as well. So you tasked Geric with make this happen. Here is CARD, they want this, you just figured it out.
Yeah. Okay. Yes and no. Yes, in the sense that number one, I had felt that if I was to get this off the ground, I needed help. I couldn't just do it on my own. I couldn't just do it as one of my many duties. And so one of the things we experimented with was an internal champion, finding someone within the group or within the organization who may share that passion and could champion the cause. And so, and we found that in Geric. And so I think it worked tremendously well, because so we did it, as a tandem. He'd do stuff, I'd do stuff. But then he also, I think in the initial days, he was able to champion it and because he was doing something else. And it was after a couple of years that we felt that, hey, if he only spent X number of, time on this and it took off, what about doing it full time? And that was what, and eventually it led to a team of young people, which Geric headed. So that really, but I guess I should stop talking and let him tell his story. So.
Yes, Geric, why don't you join us? And this is something I very often say as well, that people get appointed to lead microinsurance in a company. It's a blessing or a curse, because especially when you got started out in the early days, there was not like a playbook. It was not like that you could say, hey, this is the recipe and just apply this at Pioneer. So how did you get started? What were the kind of things that you were going after? How were you going to do things differently? As we like to say it with Microinsurance Masters, well, learn to unlearn the traditional way of doing things.
Hi, Bert. Thank you, and good day to everyone. Good evening from the Philippines. So my start in microinsurance is pretty interesting, but what seemed to be aligned from the beginning, Bert, was this shared dream with Pioneer. I really was appointed as champion of microinsurance in 2009. And during this time, I was handling one of the branches in Pioneer. And it was also at about this time when I started telling people that we have to do something for the market that needed insurance the most. I didn't know that microinsurance was already a term there, that Pioneer even had aspirations officially about microinsurance. But was just telling people and was talking about it in some of our yearly planning conferences that I feel like I have to do something about it because there's a bigger market out there and there's a bigger purpose out there. So I guess some of these got to Lorenzo and management, and when they needed someone to become champion, that happened to be me. So that started in 2009. So part of my role tonight, Bert, is to share with everyone really the story of how Pioneer grew. And we've prepared a slide for everyone here with the growth graph of Pioneer Microinsurance through those years. So let me take you all through this. In 2008, Pioneer Microinsurance started in Pioneer, as shared by Lorenzo. It actually started last quarter of 2007. So, but the first full year was really 2008. So, what is worth noting here is, aside from the official partnership with Card, there was a product called 𝘰𝘊𝘆𝘆𝑗𝑚 Paid Plan that was created. This was the $5 product that Lorenzo was talking about, and this was a bit revolutionary for its time, even until now. Bert, we were called crazy for launching this product, partly because we were dreaming of being able to cover the poor and their properties against calamity. And as you know, the Philippines is one of the most calamity prone countries in the world. But so this was crazy when we were thinking about this. But the other very big lesson that we've also learned here, Bert, as we have been teaching in the Microinsurance Master, that it's the idea of developing product to help. We call it assistance products rather than developing products to pay back, to put back everyone to where they came from, which is really an indemnity product. The idea of an assistance is you don't do average clause, you don't do inspection whether they were fully covered or not. You just trigger a payment if something happened, and your intention is to really help people stand up again. And to us, this was a very big change mindset wise, because it allowed us to reimagine the way all other products that we eventually launched thereafter. So this was really the purpose of the 𝘰𝘊𝘆𝘆𝑗𝑚 Paid Plan, Bert. So this was in 2008, our first full year, and at the end of that year, we had a modest revenue of $130, a little over, and 28,000 enrollments. In 2009, I was officially appointed as champion. And one of the things that I did during this year was I kind of wanted to figure out a better way to push insurance selling within the Card partnership. At that point in time, it was the employees who were actually pushing the product sales. But I felt like they also had other priorities, so they needed some partners in pushing, and we actually thought of the idea of the microinsurance agent. So Lorenzo approved that. It really helped push our selling within Card, and at the end of that year, we were actually looking at double the revenues and enrollments from the year before. Now, 2010 was very important because some of the people here may already know that it was during this year that officially the regulator recognized microinsurance in the Philippines by launching the microinsurance regulatory framework. So that really helped formalize a lot of the things that we did.
So
And
that's interesting, if I may. So you were already doing microinsurance even before it was there was a regulatory framework for that. You figured your way out around the rules that were in place, or within the rules, I would say.
so yes, so that's true, Bert, because I think what is unique in the Philippine market is the regulator does allow us to do a bit of something, even if there was no clear regulation for it, then they just follow it with a regulation.
Like a sandbox approach.
Yes, you can look at it that way, Bert. And if there is something about the regulation that is not aligned with how we have been doing things, then we just tweak to align ourselves with the regulation. But more often than not, Bert, what really happens here is after some of us go ahead into something like this, like microinsurance, our inputs are taken by the regulator as well. So it worked well for us.
Okay.
So
So going forward, it seems that then until 2013, 14, that's already like 5 years, 6 years almost. I mean, you were growing, but very slowly. I mean, you had 950,000 enrollments by the 5th year, but that's still probably not what was expected to be at when you were given that assignment at the start.
yes, two very important things happened here, Bert. If you look at the line graph, so it's still, not exciting up until 2013. And we can, we were building the foundation for the business. There were a lot of things that we had to experiment on. We needed to get things right. As Lorenzo shared, this graph might show that we did a lot of things right, but we did a lot of things wrong as well. So we were going back and forth with a number of things. And interestingly, 2013 and 2014 were really the worst years for us in terms of profitability, because Typhoon Haiyan, the biggest typhoon in the Philippines ever, happened in November 2013. So this was really a shock to us. In fact, a lot of our competitors in microinsurance in the market left microinsurance, and a lot of the numbers that happened of the events that happened in late 2013 actually came in 2014. But the blessing in disguise here, Bert, was, Lorenzo, the board, and everyone else in Pioneer committed that in spite of the bad situation that we were in these years, profit-wise, we still wanted to honor our obligations, because we felt that it's going to be through claims that we could really make a difference in people's lives. So 2015 in fact is like a turning point for us. So it's really the tipping point year for us. And if you can see, the graph also reflects that as well, because we have proven to ourselves and to everyone else that, this idea of building a business because of claims really works. We've proven that not only in individual smaller claims, but even on very big calamity situations like a Typhoon Haiyan. And because of that, we were able to build a reputation in the market, and in 2015 as well, because of this reputation, we were able to get more partners, and one of those partners was a pawn shop that really brought in the enrollments. And
just to be clear, if I may, for the people to understand, enrollments, that's number of policies, right?
Correct, Bert. Number of policies. There could be some double counts.
Yeah.
Yes.
So one person could have 2 policies,
Correct.
and that's where double counts come from. What are these? What we're looking at in enrollments? Are these? Is this credit life included as well? Is it a lot of mandatory? Is it mostly voluntary? What's the mix of this?
So it's actually a 50-50 mix, Bert. It's a mixture of both voluntary and mandatory. So we do have more than 100 distribution partners in microinsurance, and a lot of them are MFIs. So with most MFIs, they have chosen to bundle microinsurance with their credit. This is not credit life, by the way. So they just chose to bundle it with their credit or savings accounts. But this is really for ease of distribution. But there was also a realization that a lot of people buying microinsurance are first-time buyers of insurance. So it might be better that, because of the trust that they have on our partner institution, that they first get access to insurance that way, because it was indeed very hard, very difficult to sell voluntary insurance. Now, this is not to say, Bert, that voluntary insurance cannot work. It does work. Card has voluntary insurance. Cebuana, the pawn shop, does have voluntary insurance. But building the volume on that business really, really takes time.
But
Okay.
the big jumps here that we see in growth is due to you signing up new partners. It's not individual selling. This is you acquiring a new account who is then onboarding their clients.
Yes, that's a very good point, Bert, because when we began sometime in 2009, 2010, we didn't know what would work much better, voluntary or mandatory. So we did experiments on both sides. And very soon enough, we realized that if we really want to get fast towards the volume, we had to go for partnerships who can bring us a block of clients at any one time. And this is very important for any organization, Bert, because you know, we need to be able to show to our stakeholders internally that this could work, because these little victories will allow us to build momentum. And this is very important for organizations. You have to strategize to be able to show little success along the way so that you are able to get support that you need for the bigger growth that you're preparing for. Yes.
Okay, fantastic.
So, Bert, just to finish this part, I'll have to point out that 2019 it happens to be the best year for us. At the end of this year, we were doing 20 million enrollments and almost 40 million US dollars of revenues. But we do have a very interesting story, which I'm sure Lorenzo will touch on. 2020 was a pandemic year. From 20 million enrollments, our enrollments dropped to 15 million, and from almost 40 million of revenues, it really ended at 29 million. So we're not immune to the pandemic. But what is very interesting about the story of Pioneer Microinsurance here, Bert, is that even within the pandemic, a lot of our clients were still seeking to renew. And that's a testament of, you know, the value that we have created in the market.
Absolutely. From a business perspective, as of which point was the microinsurance business break even? Did you write numbers in black?
Oh, I think 2013 and 2014 were the red year numbers. Prior to that and after that, we were in the black. But the years prior to 2013, we were in the black, but these were not exciting black numbers, if you know what I mean, Bert. You know, so in fact, I had a conversation with Lorenzo, and I had to ask for his support to invest for the future, because whereas we were a bit sustainable, but we knew we could do more, and the numbers really get exciting after 2013 and 2014.
Right. Okay. Thank you so much for sketching this overview. And there's so much to unpack, and hence why I'm so glad that we have way more time ahead of us. I want to stand and zoom in a little bit further now on the typhoon that happened there in 2013, 2014, because indeed that's quite an important event. Lorenzo, you might want to share a little bit more about it, because it was the biggest typhoon in recent history in the Philippines, devastating because you had it covered. And as Geric pointed out, it was the point that a lot of insurers who were dipping their toe in microinsurance were withdrawing. You decided to go against that and to do differently, despite the numbers. I mean, yes, they were rising, but it's not that you had like already a massive book of microinsurance business. So maybe you can expand on that a little bit.
Yes, as Geric was saying, 2013 was when you had an earthquake, which I think we have a video on that. So there's an earthquake, and then followed by the biggest typhoon, in decades, called Haiyan in 2013. But and you always think that it's a bad year. Next year will be better. And 2014 came around, and with three typhoons hit us successively, so pretty bad. Now I do remember that moment. So decent growth, nothing stupendous, but decent growth from 2008 until 2012. And then 2013, 2014, I remembered I was summoned by the chair. And I was first summoned by the CFO. People, you probably all aware of that. You have those people. Then I was summoned by my chair. And he said, of course, he looked very serious. He says, "Have you seen these numbers?" Guys, of course, there were bad numbers. It was all the claims coming in. And I was a bit cheeky. I said, "Seen them? We created those numbers." And so I looked for a reaction. No smile. No. I mean, it's very serious. And I said, "Oh dear." And he said, "What are you going to do about them?" Never a good question, isn't it? When your board asks you, what are you going to do about them? And so I thought very quickly, and I said, I better be careful what I say. I mean, unless I'm ready to pack up. So I said, I would like to think you would want us to continue to pay the claims, don't you? And there was a slight pause, and then he said, yes, of course. I said, well then, that's what we're going to do. We're going to keep paying all legitimate claims. And after that is settled, you have my commitment. We will review the portfolio and we will decide what improvements need to be done. Do we need to reprice? Do we need to tweak the design of the product? Do we need to retire some of them and introduce new ones? And we will do that. And folks, that is exactly what came to pass. So after those two dreadful, pretty bloody years, red years, the year after that in 2015, the existing book of business actually doubled. But if you look at the figures in 2014, the enrollments, the policies were about 950,000, about 1 million. So that doubled in 2015, which is a very good sign. But the tipping point was reached because many different partners heard about us. And the fact that we paid claims, even though it brought us into the red, and that attracted them to us. And that's when you have the tipping point in 2015. So apart from doubling the existing book of business, we actually attracted the new partners, and that got us off the tipping point.
Wow.
And then that's how you see the numbers. And so that's what's happened.
Because you were very
Gary,
consistent there and really showed up in times of need.
yes, and Bert, it was crazy because it wasn't your traditional, okay, go out and pay claims. Because it wasn't safe to go to Laude, so we had to wait about 7 days before it was safe enough for people to fly in. And once they did, okay, oh, good. So pictures, yeah. So this is the scene of the worst hit area, and so people in the Philippines, it's everything's gone. Look at the picture. The ship was actually on land. That is how bad the storm was. And on the two pictures on the right are actually our people, because when we actually in 10 days we sent down a team down there with our partners. And of course, the government told us, oh, set up shop in City Hall, set up shop and they're going to come. Guys, nobody came. Why? They were so busy looking for missing relatives. They were busy because they'd lost half their house, and and no one's going to think of, hey, let me look for that policy so I can go and claim. Come on. I mean, that wasn't the case. So we said, okay, we cannot let this opportunity slide by. So instead of waiting for them to come to City Hall and look for us, we said, let's go out where they are. And so you see the table below, a table, a chair, and a tarpaulin, with a little thing to say that we are, clients, crisis claims, come, we're here. And the photo on the right upper is people actually filling up certain forms, because people came and they had nothing with them. And so we literally asked them questions as to, so are you, because our partner was with us, so they could say, yep, this is a client. And so we'd say, so do you have insurance? And yeah, and I said, and so what's happened to you? Always says, it's so bad, it's terrible, I've lost my house. So we asked them, where do you live? Where's your house? And they point, they point like that. And you look at where they're pointing and it's flat land. There's nothing standing. And so, guys, immediately we knew we also had to be more agile, and we had to consider alternative forms of requirements. So gone are the days, I want your policy, I want a copy of this, I want a copy of that. Because clearly there is no more house, and they would not have documents. It's all washed away. So we would then have to work with a partner, and sometimes we work with local government people and say, okay, can someone just, sign off, a certification that this is a person who lived in that residence, et cetera, et cetera. And that, was something we accepted as an alternative, because they would never have been able to provide the original requirements. And so they come back the next day and they get paid in cash and off they go. So it forced us, it really literally forced us. Sorry.
No, I'm hearing a lot of fantastic insights. You're working with testimonials, people who could stand in to confirm that indeed that was a person who lost his things, and you gave cash right away to help people. all in such a moment of crisis. That was really a very, very agile and nimble way of going about it. It must have taken more than 5 days, though, to settle all these claims.
Yes. Yes. Yeah. I think for some, we tried to process as quickly as we could, but then because there was the enormity of it, there were so many of them. I think we had over 23,000 clients in that one area alone. So you can imagine, even even if you tried to, you couldn't process all 23,000 in 5 days. But every batch that came, you tried to process them as quickly as you could.
Absolutely.
And so, yeah.
Fantastic. There is a video of this. Yeah. If that's all right, I'm going to put the video in the chat so that people can watch it, because I'm looking at the time as well and the questions that are coming in, and so that we can have those answered for now before we move on. And so then I'll send the video to everyone in the chat so that they can watch it, so to get a better understanding. But I think the pictures are telling already. It was devastating. There was a lot going on, and you had to handle. But because you did so well, it led to growth. So thank you so much, Lorenzo and Geric, for kind of picturing what you have done, the journey of Pioneer, and especially the early days. There's quite some questions coming in, so maybe Lemmy, you can pick out some of them so that we can have those addressed, and then from there we'll dive deep into some of these elements, which is about the bottom and the top line, which is about customer centricity, a theme that came about, and which also is about partnerships. But Lemmy, first to you and the questions.
Okay, thanks, Bert. So the first question, Lorenzo and Geric, this might not apply to Pioneer because Pioneer is a traditional company, but has a strong wing for microinsurance. But someone is asking to say, are there any benefits of setting up an exclusive microinsurance company? So really looking at microinsurance. And then are there any risks that traditional insurers trying to get into the microinsurance space, despite being licensed for traditional, would face? So really, it might not apply to Pioneer, but maybe you would have some perspectives on, are there any advantages for the growing number of microinsurers that are being born in some countries? I know there are 2 licensed microinsurers in Mozambique, so what would be your advice?
Geric, do you want to handle that first? Do you want me to do it?
Lorenzo, well, I can chime in first.
Okay, all right.
So let me, so the story of, there are actually pros and cons. So I wouldn't say one is better than the other. I just want to highlight that Pioneer's story is about, having a bigger company, allowing a microinsurance entity to grow internally. And we are able to show how that can work. And definitely for a situation like this, the advantages would include having access to resources that otherwise would have been costly to reinvent within the microinsurance company. So we do have parts in Pioneer that we don't need to redo in microinsurance. We didn't need to redo the IT, which is very expensive, as all of us know. Did not need to redo finance, HR, and a few other things. What we had to have on our own within the microinsurance team are those parts of the business that are very important to customer experience delivery, like claims, like underwriting, right, product development. So you can see with the Pioneer model that it can work that way. Now, the other advantage also of having having a situation like Pioneer is, we are able to align the board, the senior management, the middle management, and the frontliners around the common vision, then that is an advantage. Okay, I've seen organizations who have desired to do microinsurance and are trying to follow the Pioneer model, but I've seen them disconnected at certain parts. Like it's a push that the CEO wants, and one other person wants, but it's a struggle to connect to the board and to connect to the front lines. So there are pros and cons again. And perhaps Lorenzo, you can chime in with your additional ideas, Lorenzo.
I think for us the whole basis was that for me it didn't matter if we did not put up a microinsurance company. I had just felt very strongly to expand the market, to serve more Filipinos. We had to go down the ladder. Hence, we had to do sachet insurance. No, I mean, of course, I didn't know it was going to be called micro. I called it sachet, and that was what we did. And that's how we got started, guys. We partnered with all these people as pioneer. And it was because of that one of our partners, which happened to be the largest MFI, that's Card, they shared with me one of their dreams. They said, you know what, we have a huge microfinance org. We have 3 rural banks. We also have an MBA, a mutual benefit association. One of our dreams of completing our cohesive manner of addressing the needs of the low-income people is a non-life insurance company. And we want you to be a partner. that was that's just a dream that they had. And so when the opportunity came up, I actually called them up to say, there's a license available. Is that something you'd like to go into? And then they said, yeah, yep. In a heartbeat, they said yes. And so why did it work out? Because they were first our clients, and we were the provider. And so if you can look upon the joint venture as a marriage, we had been living in, so they had actually they knew a bit of us already. And as Geric mentioned, and it turned out so much better, because when we put up this new company, we did not start with, okay, we own IT, own marketing, own finance, own all that. We clearly had to say that, hey, if we want this baby to grow and this toddler to learn to walk, we cannot oversaddle it with tons and tons of expenses. And so we said, hey, let's do what we need to do. So with Pioneer, we said, we're going to take care of product development. We're going to take care of the IT. We have IT anyway. We have marketing that does a good job. So we're going to do all that and not charge. And then Card said, okay, we're going to be the people on the field to help push the sales. We're going to, you've trained us to do claims adjustment. We're going to do that as well. And we won't charge that either. So initially, in the initial years, both parties were not really charging. So you did not saddle the JV, the joint venture, with too many unnecessary costs. And of course, as business picked up, we reached our tipping point and it took off. It could now come up and reimburse us, and it could they could hire their own people as well, a bigger team. But even now, guys, even though there's like 200 people in Card Pioneer Microinsurance Inc., we've kept it, up. I know it sounds like a lot, but you're talking about 200 people to tackle 7,000 islands. We've still kept it quite lean, because that's the way, that's the way it should be. The best effort has to go into servicing the clients, So effectively, that's how it works. I'm sorry, Lemmy, I don't know if that answers it. So there are pros and cons, guys, into doing that. Now, the one big thing you have to remember in doing micro within a traditional insurance company is the internal struggle you will face, the internal challenges. Because in every traditional insurer, you will have your people, your finance people, your actuaries, et cetera, your underwriters, et cetera. And they will have very fixed ideas about how things should be. But microinsurance is a product, is an approach unlike any other. We had to unlearn so much of what we knew in order to do it. And that is a challenge that you will face internally, because people will challenge, people will sometimes stand in the way, sometimes it's just challenging, and that's fine, but sometimes they'll stand in the way. And not because they're vicious, but because they think they're doing their jobs. And so the pushback is necessary. So you need commitment from the top. It cannot be some middle-level manager or some senior manager saying, I want this, and I'm going to get support. It's got be pushed from the top. There's got to be commitment, because there'll be lots of challenges. So you will need that commitment at the top to help you fight these challenges.
Right. Maybe just 2 quick questions before we move to the next session. So one question is about customer centricity. So Vanya is asking, yes, she has been privileged to have seen your story on the CGAP site in terms of customer centricity. How did you build this model? And I think more specifically, Lorenzo, just talking about institution, were there any challenges to build that internally, to have the same belief with staff? And maybe Geric also would talk about who did you recruit? How did you get them to share the same vision to become more customer-centric? And then the other question that perhaps you can address is the value proposition to distribution. So we learned this morning that one of the challenges in Mozambique is really they haven't yet explored many channels and gotten to have many partnerships to move. They're still concentrated on agents and brokers. So perhaps maybe you could share some insights to see how did you get to partner, to give the right value proposition and maybe the struggles of having that shared understanding. So I think those two quick questions, and then maybe we can move on.
Yeah, if I actually may, Lemmy, as the timekeeper, I think these are two elements that we're going to have a deeper dive in what's next to come. So we're going to talk at more length about customer centricity and also about partnerships. So I think these could be nice segues into that. If I may, I would like to just to kind of revisit these questions when we have done this and to see if we can bring them in over there if it still would be unanswered. It's good because this is actually signaling that the things that we are going to talk about next, that this is indeed what people want us to hear. So thank you, Lemmy, for making a quick interim kind of already update on the questions that we're getting. Continue to share those because these are helping us to make sure that we're addressing what you want. And then indeed, we're going to take a deeper dive. And now we know a little bit about your story, Lorenzo and Geric. We would like to know what would be your advice going forward to the audience here, to organizations that are yet to start with their microinsurance journey or have set their first steps. And we would like to start with first taking a deep dive on really what matters a lot to insurance companies about profitability. And so we would like to learn from you about what are some of these strategies that you've taken to get there, both on top line, which is how do you grow your revenue, and the bottom line, which is how do you really get to profitability. Geric, do you want to go first?
Okay, let me go first, and I'll talk about top line. I think Lorenzo would want to talk about the bottom line. Okay, so we've already mentioned about the importance of partnerships. So I think across markets, partnerships is very important because this just allows us to build a portfolio to access a market base that otherwise is very difficult to access if we do it on our own. What is very important though, Bert, for partnerships is in Pioneer, we try to figure out a value proposition that is beyond the commission or the service fee. So what is that? So when we do our first discussion with our potential partners, that could be a competitive advantage against competitor, that could be acquiring more customers, that could be retaining more customers, or in the case of card, Lorenzo, I believe it's being able to offer something to complete the value proposition because they do want to get their clients to a better financial situation. So these are very important things that we need to figure out. So find that business problem of the partner beyond commission and service fee that microinsurance can solve. So that's very, very important. Now, the other good lesson that we also learned, Bert, is trying to create a good balance between mandatory and voluntary. Okay, mandatory selling is very good in immediately building the portfolio, but the limitation of mandatory programs is if your partners do not grow anymore, then you're probably not growing anymore as well. So on the contrary, voluntary selling takes time, but once you are able to get the right formula there, it'll probably allow you to grow beyond the limitation of any partnership. Now,
to be correct, what you mean with voluntary selling is still within a B2B2C context where you are working through partners to reach consumers. It's not
correct.
selling directly to consumers, right?
Correct. So it's a B2B concept. So we haven't really gotten much traction or success in terms of B2C.
Mm-hmm.
Okay, so thank you for pointing that out, Bert. Now, the other strategy that worked for us was we don't pre-design an off-the-shelf product for a partner. So what we do, we do have pre-designed concepts of products, but we also have the organizational flexibility to mix and match so that when there's a certain budget requirement or there's a certain benefit requirement, or if a partner wants us to create a family cover or an individual cover, we are able to respond with something, and we just don't say take it or leave it. So that's very important. The reason why this is very important, because it drives home the point in any partnership that they are allowed to co-design products and processes with us. And this is a starting point because over time, we do revisit the product design, the process design. It's very important that they own part of that process. Now, finally, Bert, on the top line strategy, what really works, especially with card, is you have to incentivize the pushers. Okay, now, in the case of card, we have the microinsurance agents. They were complementing employees to push the product.
And who are these agents? These are employees of cards?
No. They are members. They are clients of card. We had a criteria of what a good seller agent in that market. We identified the clients of card that who qualify. In fact, over time, we've created the role, Bert, of microinsurance supervisors. So these were agents that were promoted to a supervisory role so that they can help us manage the agents so that we can better manage the volume. But what is very key here was we were able to create these roles to complement the pushing of the employees. It is still very important, by the way, to push microinsurance through the employees of the partners, Bert, because clients trust them the most. But employees may not have the time and the capacity to focus on microinsurance selling. So that's really the role of the microinsurance agents. Now, we've learned over time that we don't only incentivize one over the other. We have to incentivize all the pushers for microinsurance. Okay. Now, where there is no agent, then we directly compensate, in kind or whatever the frontliners of our partners. So these are really a number of the very important top line lessons, Bert, that we have in microinsurance.
All right, let me try to summarize them. So you grow to partnerships, you don't take off-the-shelf products, but you kind of tweak them, you design them for your partners together so that there is an ownership. You go from mandatory to voluntary products. You have involved for some of your partners then agents, which are basically the clients of the partner that get incentivized, so that get an income, and because they are trustworthy in the communities, and so they can help you to grow. All right, that's quite something here already, and this is going to generate revenue. At least that's how it happened at Pioneer. So Lorenzo, how you make sure that all of that revenue is also generating some profit?
I pray a lot. Anyway.
Does it work?
Yes. Number one, I think I've touched on it. One of the really key elements, especially in the very, very early years, I mentioned already when Lemmy was asking that question. You do not saddle the new joint venture or even your unit with a lot of costs at the onset. So each of the partners took on certain costs, shouldered certain deliverables, and so it allowed the company to grow. So that really helped, especially towards the bottom line. Number two, I know it sounds strange, but Geric mentioned it, and I will say it again. Doing claims well can positively contribute to the bottom line. I know it sounds like an oxymoron, isn't it? Doing claims well can contribute to your bottom line, but it's true, and because what are you doing? What are we doing? What are we selling? We are selling a promise. We are selling a promise to make good our word. If something happens, if there's a loss, if the, you know, if the risk is taken away, we made a promise. And so the only way of testing that is in tasting it. And then to taste it, you've got to pay their claims. And hence today, up to now, it's been our mantra, and I say we chant it every day. At Pioneer, we look for ways to pay every legitimate claim. In the same light, we fight with all our might fraud. And I know what they're thinking now. So how do you fight fraud? You know, what do you do with fraud? Guys, you cannot fight every single fraud by going through every piece of paper. You price it in. You price it in. I think that's one of the fastest way to do it. You take, you know, you price it in. What else do we do? You review the portfolio. 100 partners, and in the early days when we didn't have 100 partners yet, we could do quarterly reviews with the partner. So a team from Pioneer goes to, you know, meets with the partner. We review the results, both top line, bottom line, both premiums and losses, and service issues and complaints. And then so we sit down together and say, okay, what can we do? What can we do better? What do we tweak, etc. Now with 100 partners, we do it probably twice a year, no longer, you know, once every quarter. And that helps, because that helps. Number one, you keep your partner updated, so they really know what's happening. And if they care, they will want to improve. And if they don't care, then you will know that's not the right partner. And so at the end of the day, you end up preserving the accounts and making them sustainable. And so the other bit, pricing for the bottom line. It is no longer, you no longer talk about expensive or cheap. You talk about, is it affordable? Okay, because it's always relative. And the other issue is, can they afford to pay for it? They have no money. There is no such thing. Unless you're talking about the most bottom of the pyramid. People will have money. You just have to determine, when do they get that money? Did they get paid daily? Did they get paid weekly? Did they get paid fortnightly?
Is that the difference between cheap and affordable?
That's right, because it is when they come across their money so they can pay you. And so there are myriads of ways of working around that. You know, we wanted a $40 product, and there's, oh, nobody will afford that. And then a few people did, but not everybody, because it was a huge chunk. So we, in fact, talked to our partner, and we said, you know what? You're in the business of MFI. You give out a lot of loans. Why don't you give out a loan for insurance?
Right.
And so they said, why not? And then so voila, you know, so there was that eureka moment. So we now get our annual premium. They get, you know, they get a new loan, so that it's new business for them. The client gets covered. So it's win-win-win. Now the client cannot afford to pay $40 to us in one go, but they can afford to pay 50 cents, 20 cents every week to the MFI. So again, where there is a will, there is a way.
And this connects back to where Geric was pointing about partnerships and making sure that they grow their business and improve the business through insurance, where you give loans. That's maybe also a way that it kind of strengthens each other.
Yes, and it's got to be always a business proposition beyond commission, Bert, because anyone can give them commission. But for the best partners we've had, were people we spent time finding out what they needed and how they wanted to be different, and then going in and filling in that gap or addressing those concerns they had. And then yeah, so that, I mean, you can ask me that about the motorcycle people later on.
Got it. One question I have here, going back to the graph, what does microinsurance today represent for the overall business of Pioneer?
Oh, wow.
Is it an important contributor to revenue and profit, yes, or is it like a side business still? Yeah.
Both. Bert, it is now on the retail side. On the you know, because in the whole Pioneer group now, we have institutional and we have retail. Where clients are individuals, we call it retail. Where clients are companies and corporates, we call them institution. So I oversee retail. It is a substantive volume of both top line and bottom line of retail. Substantive. And I can say easily, I'd say 20%. It didn't start out that way. Nobody thought that it'd be that way, but that's it. Well, it is what it is.
Yeah, and the second question I have is to a lot of people, and several of them on the call as well. I showed this graph, but in pieces. So we'd only show the first 3 years and then ask them what they would do, not seeing how you grow from there. Especially in these early years, did you never kind of gotten to the point that you were like, maybe we're all wrong, maybe you just like ended, yes, I have my passion and dream, but it's not translating into the numbers, the big numbers that we need to have. So maybe we just call it a day.
No. I thought, no, I did not. We did not. We were just too busy looking for different ways. So we tried a comic book. We tried a little, like a little top-up card, like your mobile prepay, both of which didn't work. And we tried partnerships. Now, why? I want to touch on that and what kept us going. You've got to try multiple approaches. You cannot just do one, because if you put all your eggs in one basket, and it cracks, then no more eggs. So you've got to try different approaches. Now, what led us to partnerships is this: any insurer listening in with any amount of self-awareness should realize that we are not a sexy industry, and people do not like us.
Ouch.
People think we're only out there quick to collect, quick to push a sale, slow to pay claims, full of complex fine print, isn't it? That's how we're regarded. And you know what's worse? Few of us have the self-awareness to realize that's how people see us. And so for me, there was no way we were going to put up our own sales force and sell, one-to-one. And so I thought, who do these people trust? What institutions do they frequent? Which organizations can they believe in? Can they accept? And it is through those that we sought to find partnerships. So MFIs, why? They go to MFIs for loans without collaterals. They go to rural banks because they're able to start up small businesses, and rural banks will give them that even though they don't have a whole credit history. 3, motorcycle distributors, because these people cannot afford cars, so they'll need a motorbike. Malls, because they don't live in nice houses. They go to the mall to chill out, so they go to the mall. Supermarkets. So we then went with these to gain partnerships from these different industries, or the pawn shops, because they remit money, because they trust these institutions, and in the process, hopefully, we will get to earn their trust when we sell and pay the claims.
Got it. All right. That's great. So top line, we have seen a few, bottom line as well. Let's see, Lemmy, do you have any questions that came in that talk about profitability, driving, growing the business, the time it takes for that, before we dive into customer centricity and partnerships?
No, I think most of the questions that are coming are still focusing on the value propositions. There is one that just came through in terms of how do you treat your partners in terms of value proposition beyond commissions, but perhaps that will also be dealt with. And then one interesting one that came, and I'm sure, Lorenzo, you can laugh at this. It says, do you panic when you have a new big claim, at the office? So I'm sure your answer is you don't panic. Yeah, but I think so far we are good. I think once we dive into the distribution and customer centricity, but perhaps we can address the issue of value proposition beyond commissions when we get there. Thanks,
We're on
Bert.
our way. We're on our way, Lemmy. So the question that I would then ask, we've seen that it's taken quite some time to get to grow your numbers beyond the 1 million of enrollments. And we learned that it's also because there was no playbook. You didn't have the insights as the insights that you are sharing now with us, and all of the organizations that are sharing those. And obviously, we are very grateful that we can come with Microinsurance Master to visit you, to have organizations and people to see it and how you went about it. what would be your advice if I'm starting today with a microinsurance activities? How long should it take before I reach like scale and get to profitability? What would be like a kind of range that you would think is acceptable? Geric and Lorenzo, what would be your response to that?
Lorenzo, let me share my perspective first. So so just a disclaimer, Pioneer's trajectory was slightly different because we had the benefit of a mother organization that was helping us. So on our first 2 to 3 years, but we were not in the red. That may not be the same for most organizations. I think most organizations who will have to start from scratch without the benefit of what Pioneer had, it might take 3 to 5 years to get to a point where things are going to get stable. Okay, why do I say that? Usually the things that you do on the first year are highly experimental. So there are lots of back and forth. The second year is when you stabilize the business. And the third year is when you start reaping the numbers, assuming you don't go back to the drawing board and experiment again. That's why I'm saying 3 to 5 years. That holds true probably to the whole portfolio itself, but that could also work for specific products that one launches as part of microinsurance. Thank you, Bert.
That is truly a difficult question, Bert. But I agree with Geric. 3 to 5 years is a reasonable time frame. 3 to 5 years, in not just for the portfolio or the business of micro, but even in terms of product development. A quick story for you guys about climate change, very popular topic, and people say, okay, climate change. So you of course think, okay, flattened typhoon. But we thought climate change, dengue fever, okay? The dengue mosquito gives you dengue fever, and some people and some people get very ill, and some people die. So we said, we want to address that. We want to come up with a product that can address that. That's our way of addressing climate change as well, because it now rains all year round. And so we had a product about $7, and really easy. You can just buy it online, buy it in the mall. You can SMS people. You can do WhatsApp, Facebook, etc. And it was okay. It did all right, but it was just, again, like the early years of our foray into micro, Bert. It took a bit of time for it to take off. I did all right, but never stupendously great until the 4th year. What happened in year 4? A massive outbreak, an epidemic of dengue fever in the Philippines in 2019. So it became the tipping point. So it did for us, it did for us what we couldn't do in the first 3 years.
That's the thing, right? If you go into a store and you buy a candy and you like the candy, you go back in and you buy another one. But with insurance, I mean, you need to experience it as well. And typically the renewal cycle is 1 year. So that it takes a while before people have the opportunity to kind of experience it. And as such, as to your point, the importance of really designing products and solutions that speak to a need. If you're designing for something that is not really top of mind or people don't really experience, how can that then be like something that people are pleased about to continue to buy?
Oh yeah, definitely.
Cool, and I think that's a nice segue into our next segment, which is about the customer centricity. One of the participants already alluded to that Pioneer is rewarded for being a customer-centric organization. In fact, CGAP, a think tank attached to the World Bank, had 7 financial inclusion providers worldwide that they selected to work on customer centricity. And Pioneer was the only insurer in that batch. And from there's a ton of lessons that have been shared on the customerguide.ccap.org. I'll put it in the chat, where you can find case studies and more about banks, intermediaries, remittances agencies, and Pioneer on their story. So maybe, Geric, if you were to say customer centricity, because it speaks like nobody is against customer centricity, right? But what does it really mean to be customer centric? What is really so difficult about it?
Okay, so Bert, so let me start by saying that the idea of customer centricity is not really strange in Pioneer because when when in Pioneer, Bert, as you may know, the attachment to our values is very strong, and one of the values of Pioneer is really humanity, and the value of humanity is connecting very well with what we do in microinsurance, especially on customer centricity. So having said that, Bert, there are a few things that we have done in Pioneer that allows us to approach microinsurance with customer-centric thinking. Now, one of the things that we do upon onboarding is we actually onboard clients and they have conversations with key officers, and that could include me in microinsurance. And we talk about our three rules in microinsurance, Bert. Okay. Any new person in Pioneer Microinsurance uh, are being taught these basic three rules. So if Moses has his 10 commandments, we have our three rules in microinsurance, and these are as follows. Uh, we do not operate the business from behind the desk or from within the four walls of the organization. We do go out and talk to our customers because, as the X file said, the truth is out there. So that's number one. Number two is we get ourselves a lot into situations where we don't know the answer to a question. So we tell ourselves, if you don't know the answer to the question, just ask the customers. More often than not, they will give you the answer. A lot of the organizations can't find the answer because they actually do not go out and ask these questions themselves. They assume. Now, number three, we also teach people that whatever people learn from customers, they come back to the office, Bert, and re-engineer the organization so that we can organize to deliver. So what you can see here are pictures of our people who were actually in immersion. Now, let me talk about immersion, Bert. Uh, we've done this program for about 7, 8 years already, but we encourage our people to spend a few days in a year to live with our customers. So some of them live with farmers. So if they live with farming families, then they have to be farmers for those few days. The same for fisher folks. One of my claims people actually ended up living with someone who owns a small eatery, and he had to wake up at 3 in the morning to go to the market so that they can cook the food so that they can sell it at a school eatery at 7 o'clock in the morning. So, but this is what's very important. Not only it transforms our team members and grounds them into the reality of the market that and the clients that we wanted to serve, but it also allows us to embed research, deliberately research about anything about our customers, about their lives, how they think about insurance in general, how they manage their finances, etc., etc. So that really is helping us. Now, these are the more formal immersion. Now, what is not very unusual to us, Bert, is everyone in the organization are actually out a lot talking to people, talking to customers, talking to partners, etc., etc. Now, the other customer-centric strategy that we find very helpful, Bert, which I already mentioned much earlier on, is we allow our partners to co-design products and processes with us. And Lorenzo touched a bit about how we sustain these activities because product creation and process improvement is not a one-time thing. There are constant reviews that we do. And what we actually also do is we deliberately get feedback and we deliberately understand the pain points and complaints of our clients and our partners. And these are strategically brought into the conversation table so that we can continue to improve whatever we do with our partners and for our clients. So these are examples. Now, let me give you other examples on claims just to put in a lot of perspective here. Now, we always start with partnerships with the desire to pay claims within 5 days, 5 working days. Over time, these 5 days actually are reduced to 4 days, 3 days. Now, what is very important here is we make the partners realize that our definition of 5 days might be different from the definition of 5 days to the customers, because we could be thinking it's 5 days when the documents get to us, and that's when we start counting. But to a customer, it's actually 5 days when they gave the document or they informed our partner. And that is very important because it could take a partner 1 month before they transfer the documents to us for whatever reason. Then we could pay it in a day or two. But to a customer, it actually means 1 month plus 2 days. It's still not good enough. And over time, we influence them to to learn how to look at things from the perspective of the customers. And this picture about Lorenzo talking to one of our clients who is a jeepney driver is a testament, Bert, about our wanting, from all parts of the organization to have these kinds of learning and conversations with customers, because even someone like Lorenzo takes time out to talk to, in this case, Mang Eduardo, the driver, because he could be making decisions that will impact microinsurance, impact Pioneer, and if he doesn't understand, the realities of our customers, then we could end up making the wrong decision. So yeah, these are points for me, Bert, on customer-centric practices in Pioneer. Thank you.
Thank you for sharing, Geric. And yeah, I can testify how powerful it is. As part of Microinsurance Master, we spent 2 weeks at your office and also that of Hollard. We've been there as well. But the highlight for everyone is the one day that we really go out and just spend time with customers. It's so insightful to get to see how people live and work and learn the risks that they face, and then to, as I say, build solutions from there, rather than to push products, to really build solutions from a deep understanding of customer needs. And that seems to be what you're really doing really well to keep that pulse, not only in the early days, but also as you grow. As you pointed out, you're making a habit of it that every employee needs to do that on a regular basis. Lemmy, is this answering the questions that you've seen passing by on customer centricity, or are there other questions that you would like to share with us?
Hi. So I think we are on course, except there are a few questions that really perhaps maybe would benefit from some quick responses from Geric or Lorenzo, because I know they might not be covered in the content that's outstanding. So the first one is really on annual lapse rate and monthly lapses. So how do you deal with that, especially for clients who pay on installments? But of course, the person wants to also know the annual lapse rate. And then there is a question specific to property, whether you have some experiences with property and SME insurance. And then there is one question on, and this is very interesting, actually. I thought I should ask you whether your experiences with microinsurance has increased your brand recognition, even in upmarket insurance, basically in conventional insurance. So I think maybe that's something that you can also share. And then someone wanted a clarification on when you mentioned that you added agents to the card employees, how did you go about that? And then the last question is on cloud-based platforms. So you can just pick any of these questions, because I know some of them may not be covered in the content. So yeah.
Maybe Geric, you tackle first the issue of the micro agent, because I said that to clarify that first, because yeah.
Yeah. Okay, let me talk about the micro agents. Thank you, Lorenzo. So the micro agents were created again to push the selling of insurance. We've only done this, by the way, with Card, the biggest partner, because the structure allows us to do it, and because of the voluntary selling that happens. So the challenge with Card is they allow us to be present in their center meetings. These are microfinance loan-led meetings, and they allow their employees to push our products. But what we've learned is employees are not very good at making follow-ups, and a lot of people don't actually immediately buy microinsurance products. So someone has to come in and follow up the selling exercise, and this is where the microinsurance agents have come in handy. As already mentioned, they are members of CARD. They have been identified based on certain criteria that fits the microinsurance agent requirements. So this is what's happening now. The compensation wise, the agents are compensated by commission. Yes, these are very, very small commissions, but the put together, because of volume, these are pretty respectable amounts every month. And a lot of, they are all women, by the way, because clients of card are women. But we've, it's heartening to know that a lot of them have asked their husbands to stop working and just help them drive around because they have out-earned their husbands. So these are very good stories. Now, the agent supervisors have some form of allowance, and the rest of their compensation are actually volume-driven fees and overriding commissions. So this is how the agent system works. The microinsurance agents model, by the way, does not work in mandatory programs, because mandatory programs perfectly work with employees alone as the pushers and the handlers of the process. So I hope I've answered that question, Lorenzo.
Right. Okay. I do want to say that when you hear agent, do not think typical insurance agent. These are cut from a different cloth, and they actually are looking at this as an avenue, different things. A lot of them have never even finished high school. So it is a source of pride that they have been trusted and entrusted to offer insurance to other people. So for them, it's a badge of honor that even if they never finish school, that people trust them enough to do this thing. Number two, they look upon it as a mission, that this is really their efforts at helping their neighbors and their friends and other center members. So there is that. I know it sounds so unreal, isn't it? I mean, we're all traditional insurers. We're so used to the traditional model of the agent, isn't it? The one who's after money and glory and trips and all that. But they really do operate differently. And are they good? Oh my gosh, yes, tremendously. I think, in our 5th year of running the operations, we finally decided to run a little incentive, a reward scheme for them. And we said, in the next 4 months, if you could sell at least a minimum of $20,000 worth of insurance, mind you, you're talking about $20,000. We'll give you a small reward. You'll go to this island with us, a learning session, etc. My golly, 180 of them qualified for that. And you know what? Some of them did not produce 20,000. Some of them sold $60,000 worth. It's amazing what empowered people are able to do. And even that session that we ran with them, in that reward trip, they were so grateful. Completely unlike any of our typical agents. We asked them, so what was the best thing about this trip? And you would think, oh, it's the hotel or it's the trip. It wasn't. Number one was, it's my first time to take an airplane. Number two, it's my first time to leave my little town. And number three, sir, this is the first time someone's ever called me ma'am. So this is, and for us, this really affects the way we do things. I think if you're able to empower people and see the difference it can make in their lives, guys and gals, it is worthwhile. That picture Geric showed of me in the jeepney, I do want to say that was a real customer-centric moment, because what you don't see in that is the jeepney driver says, come to my house, at the end of the run. And so I go to his house. And when I walk into his house, his wife, Nora, was waiting. And there were like 12 people in the house. I said, what are all these people doing in the house? He said, oh, my wife, you know, I SMSed her to say you were coming, and she probably told the neighbors. So they're all here in the living room, you know, in a small living room. So I said, well, yeah, if your guys are here, let's have a chit chat, you know. So it became a town hall of sorts. And so I said, yo, so how many of you, you know, are card members or you know, microfinance members? So a lot of them raised their hands. I said, how many of you have actually bought insurance, you know? Because I knew 𝘰𝘍𝘐𝘍𝘍𝘍 bought insurance from us. And then so of the 12 people, lo and behold, about 8, 9 of them raised their hands. I said, wow. And I said, how many of you have had a claim? 6 to 7, you know, just about. Only 2 did not. Just the rest of them all had claims. And I said, what happened? They said, oh, the typhoon came, the roof was blown off, we had a little flood, et cetera, et cetera. And so I said, is there anything else we're not doing for you? Is there anything else? Yes. I said, what? ER, emergency care. They said, you know, we have emergency cares, and whenever we go, the hospitals won't take us in because we have no money for deposit. I said, no. I said, that's illegal. They said, yes, sir. Nevertheless, no deposit, no admission. And so and so I started saying, so what are we looking at? You know, and this, you know, just emergency care, you know, a bit of this, a bit of that. And so that's how I said, and how much are you willing to pay for such a product? So they gave me a figure, as you know, they gave me an amount. And it was really through all that discussion with those people in the room that I brought that back to our office, into the lab, and we started tinkering with it. It took us quite some time. Today, even amidst the pandemic last year, we were rolling out that ER product for the micro sector. And we're due to complete the rollout nationwide in 2 months' time. And that started with that time with Mang Eduardo in his Jeep, leading to my visit to his home with those 12 neighbors.
That's really inspiring, Lorenzo, indeed, to keep the pulse of the customer and the voice of the customer, as you call it, at all times. I'm wondering, going back one step, when you talked about the community agents, was that your go-to market strategy all along? Or is it because you didn't see it working out with professional agents, like the agents from the microfinance institutions or your own? And would you advise organizations to do that as a first step, or only in a later stage when it's more already mature and insurance is a known concept and what have you?
Geric, you want to tackle that first, and then I'll chime in? Unmute.
Sorry. So Bert, you might have to, you know, I lost you for a bit.
We take you by surprise. Because it's getting very late for both of you. Huh?
No.
So the question was about the community agents. Was that the go-to market approach from the get-go, or was it something that you developed because the other things weren't working? And with that, is it something you would advise to others as like the first step, or would you only advise to go to have community agents when you see, okay, we have already a partnership that is working, their clients, they have an understanding of insurance, and only in that stage it makes sense to involve the community?
Okay, so Bert, the microinsurance agents, the community agents, evolved from a previous strategy that did not work so much for us. Okay, the original idea which we subscribed to, which initially worked, was we push the product through the employees of our partners. And it was actually very instrumental for us, Bert, because it took us to the first 50,000 clients. But we stagnated at 50,000. And the realization was that was the maximum that model could take us in that partnership, which is CART. So I had to figure out, Bert, how to take that number past 50,000. So I think the lesson that can be learned here, Bert, is there's really no guarantee that the first ideas will work. What is more important in organizations is you don't fall in love with a good idea, because we all have good ideas, But when we constantly get feedback from clients and we allow ourselves, when we look at numbers and are really very open to, feedback, then it's easy for us to be able to pivot if we must, once things do not work anymore. So the idea of community microinsurance agents was really born out of that, Bert. And after we implemented that, a full year after we implemented that, Bert, we came from 50,000 to about 140,000, I think, by doing that alone. By doing that alone. Thank you, Bert.
Lorenzo, you are mute.
I'll just chime in on that. So no, it really wasn't the original idea to say that, oh my God, let's replicate traditional insurance. Let's create monsters. Sorry, slip of the tongue. Let's create, on the micro level as well. And so it wasn't that. It was through certain attempts, and some of which were failed, that led us to that. But ultimately, will I suggest that people do that? It depends. If an opportunity presents itself and it seems to make sense, you can try it. But you don't necessarily have to do it that way, because the whole issue is that if it's a different type of person, the micro agent really looks upon it, as a mission where they earn a bit and they're not too greedy, and they're not, and so that it operates differently. The mindset is very different from your traditional agent. So you do have that. But again, I go back with partnerships. I think are the ones that really do matter, because if you can get a partner on board and you can get their partner to get their frontliners to help move, then that credibility they have with the intended market will help. The credibility they have, the trust that they've earned will help you move your case. Yeah. I don't know if
some of the partners that you're having, right? Because that's indeed on subject what we have right now. So what is for you, what are you looking into when it comes to partners? What is the criteria? What do they need to have? Are you looking at minimum size, at kind of the type of products that you can see linkages with insurance? Like, what are the selection criteria that you have to define a potential partner, or what can become a good partner?
Okay, thank you. I think most important, you share the same set of values. I know it sounds corny, but it really, really matters. When push comes to shove and everything else, you need to find partners who share your values. Otherwise, it's going to be a big issue. How big do they have to be? How small do they have to be? Naturally, if you're after impact, if you're after reach, impact, and helping more people, getting insurance across to more people, the larger the partner, the better the opportunity of spreading it out. Having said that, and so we have partners large and small. I think Card is the largest MFI in the country. The second picture you see on the upper row from the left, SM, this is the largest mall in the country. 𝘊𝘰𝘯𝘧𝘦 is one of the largest pawn shop remittance chains in the country. MCOR is not. It's a substantial player, but it's not the largest. Life Bank is one of the most active, but it's not necessarily the largest rural banks. Motor Trade is the largest motorcycle distributor. Skygo is the medium-sized one. USSC, Western Union, is a substantive one, but not necessarily the largest. Now, so I would say size does matter, but the values are more important. And so you also need to find a partner willing to do something for their market beyond earning an extra buck, beyond foisting some product on their clients. So they have to be willing to identify needs that need to be fulfilled, hopefully by insurance and the partnership, and they will now co-own and co-create that program with you, the insurer. And most importantly, as Geric mentioned, because we count upon them, so they have to be willing to participate in introducing the product, rolling it out, incentivizing their frontliners. Now, if I may just do a quick story, because this is I think a really helpful story. Motor Trade, okay, second row, bottom row, second company from the right. Motor Trade is the largest motorcycle distributor, and we so love that market, and we courted them, and they said, no, go away. We don't want insurance. Nothing to do with insurance. Our business is motorcycles, and how dare you, go away. So I said, no, give us a chance, give us a chance, give us a chance. I said, tell us. So you find out more, guys, about them. So 15% of their volume, 20% of their volume is sold to cash buyers. The balance of 80% is loans. People borrow money. They take out loans and then they buy the motorbike. So voila. So I said, so what's your repayment ratio like? Do you have issues with that? They said, well, as a matter of fact, we do. There is a relatively high level of foreclosure, people who then are not able to pay the loans, and so they have to foreclose the motorbike. And I said, what are the causes of such failures? So they said, well, clearly, number one, the guy dies, so again, no one to pay the loan. The guy has an accident, so his money goes to pay, for that, so he doesn't have money to pay for the motorbike. The guy gets sick, he's in the hospital, he pays his hospital bill, but not the installment, the amortization for the motorbike. And then lastly, he says the motorbike is damaged. He has no money to get it repaired. And so he just gives up the motorbike. So again, armed with that, back to the lab, to the office. We said, okay. So we then, after lots of thinking and processing internally, and then we go back to them and say, okay, what about this? We have a bundled product for you that covers the driver, owner, for a bit of death claim, burial assistance, accident cover, hospital cash when they're hospitalized, and for the first time ever, own damage at an affordable level, not a high level, it's about a couple of $100 worth of cover. And all of this, say for about 1,200 pesos. And so they said, no, that's too much money. And so they said, but they were intrigued by the fact that we could bundle all of that. But the stumbling block was 1,000, was substantive. It was quite expensive. And because that was about $25. So I said, so how often do they pay you anyway for amortization? They say monthly. I said, good, we will follow that. And so they said, okay, we're going to start. Now, but they were still hesitant. So at the end of the day, I said, look, this is a solution that will address a lot of the foreclosure or people who could not keep up with amortization. So this is a good thing. So they said, okay. And then we said, and you know what? For all the motorbikes that suffer damages, we will refer the repairs to you. So you see, guys, it's not just about commission. We've now developed a new stream of revenue for them, which is repairs of motorbikes that were bought from them anyway. And so today this partnership has grown and it's continued. So it has substantive volume, and we've now rolled out in all 250 branches of Motor Trade.
That's fantastic. That's a fantastic story indeed. But I'm wondering, I think that a lot of insurers, they go, they send out the salespeople to talk about commissions. And so that's also what a lot of organizations expect. Are you talking to some organizations that are very large, but don't get it and just are asking about commissions? And if they're large, is that then a strategy to go in with kind of paying them a large commission to then later on to develop the partnership? Or are you saying if that is really where they are starting from, there's no way that we're going to get it right and we just walk away from the deal?
Bert, funny you asked that, because what you're flashing on the screen are some of the largest, companies, except for a couple of them in their industries. And they're great partnerships and we're all doing very well, but they don't have the highest commissions. Because Bert, that's not what they're after. Yes, they're earning a bit of commission, which is very decent, but they have more. For the Motor Trade, it's an additional stream of revenue. For the others, it's an ability to distinguish themselves from their competitors. It is showing that there is value they can provide to their client. It makes them different. It makes them more worthwhile. It breeds loyalty as well. And so you've got to show them that there is something else. It isn't just all about money. I tell you what, because it will not last. If it's just money and commission, the next player that comes that offers them better commission, they're going to dump you and move on. And that's not sustainable. You know, I think we all think, yeah, just give them all the money and it'll be a great partnership. No, it's not. It may not be. You know, the other thing that people ask me quite a lot of is, what do you think of subsidies? You know, what do you think of subsidies? Because if it's too expensive, they cannot afford it. I don't agree with that because it's not sustainable, Bert. Subsidies are not sustainable. Who's going to subsidize? The government? How long will they do it? Some entity? How long will they do it? And what if they stop doing it? What are you going to do? Are you going to fold up? So it has got to be sustainable. So even if it's with a partner, and so if you cannot collect on a monthly basis, then you make sure they get a loan from an MFI, from a rural bank that can. Then that makes it affordable to them. You know? And so then it makes it affordable to them, and then makes them buy your product and then enjoy the benefits of it. So it is quite critical.
And not relying on subsidies, does it also hold true for agriculture? Is that your approach as well, or is that a different ballgame?
I mean, that is, well, the jury's out on that one. Currently, we have a product that's not subsidized. I mean, it's doing okay. It covers damage from typhoon and flood to rice and maize, but but it's not subsidized as well, because again, always the issue of that. So yeah, but the jury's still out on that one. Yeah.
All right.
But so far, no subsidy.
To segue into questions, one question that came from Mel is about maybe partnerships that didn't work out. You must have had some, right? Can you share a story that is around some of these partnerships that didn't work out, and maybe also why? What was some of the? Is because the misalignment? Is it down to that, or is there more to it sometimes?
Yeah, Lorenzo, may I pick that one up?
Are you going to talk about Jane? Go on.
So Bert, you know, I just want to say that we do have a good track record in terms of maintaining partnerships. We did lose some, and when I look back at who we lost, it's mostly centered around the eventual realization that there is a values disconnect moving forward. A number of these partnerships, we end up parting ways in good terms, though, is because we wanted to make adjustments on products or in the processes, because we feel that that was the better way to go for customers. Like the loss ratio is very bad, and we've been in that situation for 3-4 years, and at a certain point in time, Bert, you'll have to correct that, right? So losing money on a portfolio on 1 year, 2 years, even 3 years, the portfolio can take, but at a certain point in time, that has to be corrected. And most of our partners actually, amazingly, Bert, will tell us on the first year or the second year of continuously losing money on a portfolio, they will tell us, you have to correct this because we don't want to lose you. So we must be doing something that's right for them. But 1 or 2 of our partners just said, we don't care. We want to drive the cost as low as possible. So if you don't want to do this for us, then we'll just move on to another one who will do this for us. So it's around those, those are the stories that usually allow us to lose out on partnerships. Now, I can think of one partner, Bert, that there was really a total refusal to correct claims processes. There were a lot of fraud. We were paying a lot of claims that we shouldn't have been paying. And as you know, Bert, this is par for the course for us because eventually we'd like to be able to correct this. But at least one organization just said, we really do not want to go that route. We have bigger problems other than this. So those are the kinds of partnerships, Bert, that eventually we find ourselves, separating away from. No, so yeah, so around those, and I tell Lorenzo, we lose those partnerships because at the end of the day, Lorenzo, these are misaligned values, and it's okay, and part of our learning as well. So.
All right, thank you.
Bert, we've also
Lorenzo.
lost certain partnerships where there is a lot of internal strife, where the partner internally has a lot of strife and a lot of confusion and internal issues. That is never effective, because that will always spill over to the partnerships. And no matter what we do, you're always going to get caught in a crossfire.
Cool, fantastic. Even with 2 hours, we're already approaching a little bit of the end of our time together. Before we really go and leave it to the questions, I want to go back to the graph that we have discussed at length and look a little bit at the tail. And so it's clear that that COVID-19 has had its impact. Geric, you alluded and made clear that a lot of people continue to pay even though all of the struggle they have. So they have insurance in somewhere in their priority list. But still, we see that there has been some pushback or at least some loss of business for good reasons. How do you see this going forward from here?
I think am I on? Yes. I think the pandemic was something no one foresaw, Bert. And so, and in the micro market, I mean, of course, everyone is now talking about digital and talking about technology, etc. And that is all well and good. But that particular market, I think ultimately, even from the pandemic, my learning is that it's got to be a blended approach at best at this point in time. I don't think they're ready to go digital completely. And so there was a loss of business because there was that inability to do face-to-face, that comfort level of trust and discussions, etc. But there are wonderful learnings that we've had. Last year, in the big lockdown in the Philippines from mid-March until end of May, we had 340,000 policies, we had sales, and they were up for renewal during that period. And of course, no one was out there, and they could some tried to contact us, but there was no way, because they couldn't physically go into a center and pay for it, etc., because it was lockdown. But we counted approximately 70,000 people who actually attempted to touch base with our team or with our partner. This is by Facebook, by Messenger, by SMS, etc. Just asking about, what about my renewal? What's going to happen to it? Now, 70 out of 340, you may say that's not a lot. I disagree. That is tremendous. You have 70,000 people who actually, in a lockdown, in a pandemic, actually remembered saying, "What about my insurance? It's going to expire. What do I do with it?" That is progress, people. That is consciousness, And so we rewarded that. We rewarded that. We said, the moment you just signify that, you SMS us or you have Facebook Messenger and all that, we will count it as renewed, even though it's not paid. That is the way that, it deserves such a reaction and a treatment. We're going to consider that. And so when true enough, when lockdown was opened up in June, July, we could talk about payments, but they were already covered. But then wait, there's more. So there's other people now say, "Oh, what about me? What about me? I didn't know you could do that. I didn't know you could do that." So we said, well, you have one chance to do so. Do it now. You have now. If you do it now, then we'll consider you renewed as well. Then the last thing came towards November, December. Is that we never knew about it. What's going to happen to us? Because if I start buying the policy now, because there's an element of waiting period, because that covers health, that covers death, etc. So there's a waiting period, a 6 months waiting period on one of them. So if they now, if they didn't renew it then, and then they were going to renew it in November or December, then they would now have to go for a waiting period. So we said, you know what? We're going to reward that consciousness and that willingness to work on the renewal. So if you renew it within this year, this is last year, within last year before December, we will waive the waiting period.
Fantastic.
And so these are all ways of reacting positively, and creating a positive experience.
Thank you so much, Lorenzo and Geric, for being such a source of inspiration and of really promising for so many of us who are joining here. So let's turn that into questions you might still have left outstanding, so that we make sure that nobody's really left with big concerns before we end our sessions here.
Thanks, Bert. It's quite challenging to pose some of the questions because they might just, get us into another half an hour or an hour. But I wanted to maybe just give an opportunity to Geric and Lorenzo. So everyone hears the pioneer story, and you've been a source of inspiration to many of us in this field. And this has been exciting. And most of your content can't fit in 2 hours. We did 4 hours in one country and we still couldn't finish the content. So we really appreciate it. I just wanted to ask I'll ask maybe a question to each of you. For Lorenzo, I'll begin with the purpose and vision. And maybe if you were speaking to the CEOs in Mozambique and in other markets, how can they translate this? This morning, we just learned that the interest in inclusive insurance in Mozambique is there. But, when we look at the numbers, the numbers are quite low. What would be your advice, to the CEOs? How can they translate that interest and vision and passion into reality so that we can begin to talk about traction as well? And I also like your message on combining social dividends, with financial gains. I think making sure, and for you, that has even been evident at the agent level, translating, empowering people, giving them a source of income as well. And then for Geric, I think you have been very much part of the institutional setup. Who do you recruit? How do you still instill, this passion? How do you onboard? I think maybe you can share a bit of how you onboard staff and just get them to also share the same vision. And I think after that, then we can wrap up because we have now around 3 minutes to go. So I'll start with Lorenzo, then Geric.
My quick message, but it's never quick because I keep blabbing. Is there a business case? Gentlemen, I get asked this all the time. Does it make sense? Does it make sense? Gentlemen, yes, there is a business case. Every which way you look at it. Number one, if you look at growing your market, you cannot be competing in the bloody market of the AB sector. You have to expand the market. And where else do you go but down the ladder? Number two, that is our role. That is our obligation as insurance companies. Remember how Lloyd's of London and all these other old insurance companies began? What were they after? They were after managing risk. They were after enabling people to rebuild their lives after a loss, after a flood or a storm. They were after helping widows and orphans. It's only now we've forgotten that vision and we've forgotten that mission. We're just all after, this is how big I am, how much premiums I have, et cetera, et cetera. What about going down to brass tacks? So we have all the reasons to go into it because that is our that is our mission. Now, is it going to make money? Are you going to bleed to death? Okay, clearly, you cannot go into this saying that I will just keep giving away money and I'll bleed to death and give it, and not charge, because then it does not make business sense. Now, if you make too much profit, you've got to ask yourself, how much value are you really giving the client if you're making too much money? So the key effort here is it has to be sustainable. For you to make enough to plow back and pay your expenses and plow back. But is there a business case? Definitely. But for it to work, you've got to go beyond the business case. Thank you and good luck.
Thanks, Lorenzo. Geric?
Okay, so when I started the microinsurance, Lemmy, and I heard about Lorenzo's vision of what it needs to be, I quickly realized that the experience which we insurers hold dear, because in insurance we price experience very much, Lemmy. I quickly realized that is a liability in microinsurance. I've heard Lorenzo's stories, and I know a lot of people with a lot of experience. But when we started talking about connecting to Lorenzo's microinsurance vision, then people start cautioning Lorenzo, cautioning me how things cannot work, because they claim to know a lot about insurance and this just wouldn't work. And they were all well-meaning, Lemmy. So what I ended up doing with Lorenzo's agreement was to totally negate the liability on experience. I had to hire young people who didn't know anything about insurance, people fresh from the university, people who had no clue about how to do microinsurance, proper microinsurance. And I told myself that if I must be the one who will be infecting them with microinsurance thinking, then if there's someone who needs to infect them with the thinking of microinsurance, then it had to be me. And the instruction, Lemmy, was very simple. Go out there, talk to clients, bring that learning back, and let us reorganize ourselves. And this was very crucial in the first 5 years when we were still building the team and building the organization. Then eventually this gets translated into systematic onboarding exercises that still exist up to today, Lemmy. So I hope that helps. Thank you very much.
Yeah. Okay.
Let me one last advice.
Please.
If I
Yeah.
do it, I also experimented with another team of experienced insurance practitioners when I was doing this. If I had to do it over again, I will not do that ever again. Insurance practitioners, experts, etc. They may be great at what they do, but they have too much baggage, and we do not need baggage in microinsurance.
Okay, perfect. Well, maybe let me just summarize a few key messages. It's always not easy to summarize from such a very insightful session. So I picked up a few things. I think Lorenzo started by saying that it's not easy, but it's possible and it's doable. I think Pioneer's story tells you that they had challenges, but it's doable. I think the presentations also alluded to the issue of persistence. I think Bert's question to Lorenzo was, did you ever feel like giving up? I think if you are purpose-led, you won't give up and you try to make it work. And I think Pioneer story tells that, you have to try so many things. Lorenzo also cautioned in terms of putting eggs in one basket. I think I've seen some insurers just say, let's just start one product line, with one partner and you keep pushing. I think you have to try many things if you have to be successful. And of course, be willing to unlearn. I think the last point just says that if you are always conscious, I think I've heard, in most workshops where people say, it's just not possible. We just have to do it this way. I think once you have that attitude, you won't do it. I think Geric said something that I've grown to like. He said, insurance is about black and white, but microinsurance is about gray. So it's the gray areas, that we deal with, so yeah, so I think we have to look at that. And then of course, one key lesson also is make partnerships work and have shared vision. And the last point is that viable products are born from customer insights. So talk to clients. This morning in the landscape, people are saying that they don't have market data. Go out there, send your people, talk to clients, develop products from there. I hope I have summarized the session. So Bert, your last word?
Next time we do just 3 minutes because you wrapped it up really nicely. Thank you so much, Lemmy. It was fantastic. Lorenzo and Geric, your passion for microinsurance is coming really clearly from the screen, even though it's 11 p.m. for Geric and 3 a.m. for Lorenzo, which again speaks for how passionate you're about this. Thank you so much for sharing the gospel, for making us all really more encouraged and about microinsurance and keep up the fantastic work.
Okay, thanks everyone for joining us. And remember the session, the conference continues. So tomorrow we are back at 9 a.m. with another exciting session. So see you tomorrow. Bye.
Thank you, everyone. Bye.
Thank you. Bye-bye.
Bye-bye.